Hi traders, in this video I will be showing you an awesome standard error band strategy that's super powerful and very profitable when applied correctly. I've painstakingly backtested 100 trades with this strategy, and in a 12-month period it performed with a win rate of 55% and it made a 248% return on funds over the period. I won't waste your time with the maths behind this powerful indicator or start going through the history of its inventor, but basically the standard error bands indicator helps traders understand price volatility and potential price direction by placing volatility bands around a smooth linear regression line, and the upper and lower bands measure volatility deviation, basically how much the market's moving. When price breaks the outer bands, it can indicate an overextension of price and a pullback of some sort could occur. The middle line helps show trend direction. Unlike simple moving averages or Bollinger Bands, this indicator incorporates the concept of standard error, a statistical measure that also shows how closely prices follow the predicted trend line. So when the price is in an up or down trend, if the bands stay relatively close, this is a good sign for continuation. Okay, so with this strategy I will outline a full set of instructions on how to use it in easy steps. It works across the major currency pairs, but I've used Euro-USD for the backtest and trade setup shown here. Let's get started then. I'm using TradingView here. Add the standard error bands indicator by Alex chart, this one, with standard period setting of 21. And we're also going to use the Vwap, volume weighted average price, to dial in our entries. So add this one. I changed the colour of the Vwap to orange like this. I used the 5-minute chart for entries, but as markets are fractal it will work on longer time frames if you prefer swing trading, but you will need to backtest this yourself. This strategy was backtested with a risk-reward ratio of 1 to 2, meaning we risk $1 to make $2 with each trade. Also, I risked 2% of the account balance per trade. First, check the market on a higher time frame. I'm using the 1 hour to check and identify obvious levels of support and resistance, and see big picture trend direction. I usually hide indicators to do this as it cleans the chart up. Mark key levels of support and resistance like this. Okay, we can see the market is in an uptrend currently, so we're looking for long or buy trades only. Check FX news calendars or a Squawk service to ensure no news is due, and be aware of your trading hours. I prefer London and US session for this currency pair. On the 5-minute in the current market we can see a clear consolidation here. Keep watching for dojis and shooting stars or hammers to confirm this. Both Vwap and standard error bands are tight and statistically a move is likely. And based on the overall trend, and because consolidation is often an indication of a strong move setting up, a price rise is the most probable outcome. Prepare to enter a trade when the standard error middle red line crosses above the upper green Vwap boundary, but then you need to wait for a 5-minute candle to close above the upper green Vwap boundary before you enter a trade. You can see this one here is an acceptable buy setup. Remember, we have to see a 5-minute bullish candle close above the green band after the crossover for a long trade. This is another buy setup that ticks all the boxes. We've got the standard error red line crossing above the green Vwap outer line and a bullish candle close after the crossover. Okay, so let's enter a buy trade. Set your stop loss to a couple of pips under the Vwap orange line and your take profit to a risk reward of 1 to 2. Let's see the trade play out. Nice. We can see it works out perfectly on this occasion. And here is where it would go wrong. While we do get a crossover and candle close above the outer Vwap band, the Vwap bands are very spread out and we're looking for compressed Vwap bands and standard error bands in our setups, so this would not be a trade to take. Not to forget the fact there is also an area that acted as resistance previously right in the path of the trade. Okay, for a short trade, first check the market on a higher time frame. I'm using the 1 hour to check and identify obvious levels of support and resistance, like this. We use the same rules as for a long trade in step 1. except we are looking for a downtrend on higher time frames. On the 5-minute chart, you're looking for a period of consolidation with narrow standard error bands and Vwap bands. Look for dojis, shooting stars and hammer candles to confirm price indecision. If the standard error bands start heading down, wait until the standard error red line has crossed below the lower green Vwap boundary line, and then wait for at least one 5-minute candle to close below the lower green Vwap boundary line. You can now enter a trade. Set your stop loss a couple of pips above the Vwap orange line and your take profit to a 1-to-2 risk reward ratio. And here is another good sell setup. You can see the standard error line crossing down past the Vwap outer band and multiple candle closes where you could enter profitably. Here's another one. You can see the standard error line crosses down over the Vwap outer line and a good bearish candle close. One thing to notice in the examples of good setups here is that the standard error bands and Vwap bands are relatively close together and in tune with each other. That is not the case for the bad buy example or this bad sell example here. We can see here the standard error line saves any confusion. It didn't actually quite cross down over the Vwap lower band. Also, the Vwap bands are too far apart compared to the standard error bands, and there is no bearish candle close under the lower band, only a bullish doji. So there you have it. A very solid and profitable strategy using standard error bands and the mighty Vwap that you can use right away in the markets. Thanks for watching, and I hope this has been helpful, and please do like, comment and subscribe as it means a lot and helps the channel grow. Until the next time, keep chasing the edge.